Have you ever wondered why the price of gasoline seems to go up and down without any apparent rhyme or reason? The answer lies in the complex world of global oil markets where prices are shaped by a wide range of factors from geopolitical events to natural disasters to economic growth. In this video, we'll explore the many factors that impact oil prices and how they affect the global economy. Whether you are an investor, policymaker, or just a curious consumer, understanding the dynamics of oil price changes can help you navigate this complex and ever changing market. So, buckle up and join us on a journey through the fascinating world of oil price changes. Without further delay, let's start our video with simply understanding the basics. As we all know, oil is a type of commodity, which means it is a type of resource or raw material that is most commonly used in production of finished goods and services. And the most common form in which oil is traded and transported is known as crude oil. Crude oil is a natural occurring unrefined petroleum product that is extracted from earth and then refined in various forms such as gasoline, diesel, and other petroleum products. About 100 countries produce crude oil. However, 5 countries were accounted for about 51% of the world's total crude oil production, which includes 14.5% by USA, 13.1% by Russia, 12.1% by Saudi Arabia, 5.8% by Canada, and 5.3% by Iraq. Let's have a look on the factors that impact on changing of oil prices. Supply and demand. When there is more supply than demand, the price of oil typically drops, and when there is less supply than demand, the price typically rises. This is because when there is a surplus of oil, suppliers are forced to lower prices in order to attract buyers. Conversely, when there is a shortage of oil, buyers are willing to pay more in order to secure the limited supply. OPEC. Second most important factor is OPEC, the Organization of the Petroleum Exporting Countries. As the name suggests, OPEC is a group of countries that contributes in producing a large portion of the world's oil supply. OPEC includes countries with some of the world's largest oil reserves. At the end of 2019, OPEC members controlled about 70% of total world crude oil reserves. The decision of OPEC has a huge impact in driving the prices of oil. For example, if OPEC decides to cut the production of oil, this can drive up the price of oil due to lower supply. Similarly, if the OPEC decides to increase the supply, it can drive the price to fall. Stock market. The stock market can have a significant impact on oil prices, and the relationship between the two can be complex and dynamic. The stock market is a place where people can buy and sell shares of companies that are publicly traded. When the stock market is doing well, people feel more confident about the economy and tend to spend more money. This increased spending can lead to more demand for oil, which can drive up the price. Similarly, when the stock market is not doing well, people tend to spend less money, which can lead to lower demand for oil and a decrease in price. Additionally, the performance of oil companies can also impact the price of oil. If oil companies are doing well, they may produce more oil, which can increase the supply and potentially lower the prices. Another factor to consider is the strength of the US dollar. Since oil is priced in dollars on the global market, a stronger dollar can make oil more expensive for buyers using other currencies, which can lead to lower demand and a decrease in price. Overall, the relation between the stock market and oil prices can be complex and influenced by many different factors, but it's important to remember that changes in one can impact the other. Geopolitical events. Political events in oil producing countries can also impact the price of oil. For example, if there is political instability in a major oil producing country, this can disrupt supply and cause prices to rise. Natural disasters. Natural disasters such as hurricanes, earthquakes, and floods can also impact the prices of oil. These events can disrupt oil production and transportation, leading to changes in supply and price. For example, hurricanes in the Gulf of Mexico can disrupt offshore oil drilling and cause supply shortages, which can drive up the prices. Wars. The impact of war can be easily explained with the help of latest example as of 2022 when Russia announced war with Ukraine, which made a huge impact on oil prices. Amid concerns about a shortfall in global supplies for Russia, oil prices soared to more than $120 per barrel before they fall back to almost pre-war prices. Economic growth. Economic growth in major economies can lead to an increase in demand for oil, which can drive up the prices. Similarly, economic downturns can lead to decrease in demand and lower prices. Understanding these factors can help investors, policymakers, and consumers better anticipate and respond to changes in oil prices, which can have significant impact on global economy. Impact of oil price changes. The impact of oil price changes on the economy and daily life can be significant as oil is the crucial resource that is used to power many aspects of modern life. Here are a few ways that changes in oil prices can affect the economy and daily life. Inflation. When the price of oil goes up, it can lead to higher inflation as the cost of producing and transporting goods increases. This can be especially problematic for low income households as it can make it harder for them to afford basic necessities. Stock market. The stock market can also be affected by changes in the price of oil as it can impact the profitability of companies that rely on oil. For example, if oil prices rise, this can hurt airlines and other industries that use a lot of fuel. Energy sector. The energy sector is one of the most directly impacted by changes in oil prices. If prices are low, this can make it harder for oil companies to turn a profit, which can lead to job losses and other economic problems. International trade. Changes in the price of oil can also impact international trade. For example, if a country relies heavily on imported oil, changes in the price of oil can impact the value of its currency as well as the cost of goods and services. Environment. Finally, it's worth noticing that changes in the price of oil can impact the environment. When oil prices are low, it can make it harder for renewable energy resources to compete, which can lead to an increase in greenhouse gas emissions. In conclusion, the price of oil is influenced by many different factors, and changes in oil prices can have a wide range of impacts on the global economy. As we move toward a more sustainable future, it's likely that we will see continued changes in the price of oil as well as increased interest in renewable energy resources. Thanks for watching. If you have any questions, you can ask them in comment section.